And we'll say hello to everyone. It's Sunday evening. We're busy getting ready for what we hope to be a great week. I think we have some Fed activity. Markets are really pretty high. We're going to be changing the view this week and even starting with tonight. But tomorrow, if you get the opportunity, feel free to patch in at about, oh, I suppose about 9:15 or so. And we're going to have some programs running and you're going to get to see them running live and get back to some program and we'll see how the outcomes are. We'll be monitoring them. But if you have any questions, be sure to visit the site. Feel free to give us any calls or give us a call 9 a.m. to 9 p.m. if you get any questions. Markets have been running, and seasonally. And by the way, we will be changing over the contracts. We really probably should start trading. When I stop and think about it, we'll probably update these tonight, the March contracts. They're still going to be around the December contracts until this Friday. Then they'll be gone. But the March contracts will be trading now. So we'll be changing those over tonight. And the challenge we have is still the calendar because of this because of the holiday. There's a natural bias for the markets to want to go up this time of year, and we may have the Fed in here jawboning. So it's really going to be difficult. You know, I got to be careful about saying that too much about what we expect because we play what's at hand, what we have. But seasonally speaking, I think a pullback, a light pullback, is overdue. But anything major, barring anything unforeseen, I'm not sure that I can see that happening, and may not even happen early January. It may be a little bit later. The volatility's been really suppressed, so keep an eye on the VIX, and it is what it is. I mean, it's just been remarkable. The Is there a bubble? It doesn't really matter, right? You can make great money in a bubble. Can't tell anybody they're in a bubble. Who cares anyways? But just having been around the markets a little bit for a long time, um, this is without question a bubble. No question about it. None, zero. You know, now when it goes, we will have a front row seat. Do I think it's tomorrow? Not likely. Um, it would be normal, that it would be sometime around March 5th, March, next year. But during the .com, there was everything was going up. Anything that ended with a .com just went crazy. And money was also flowing into something called Beanie Babies, I think it was. In '08, real estate, just buy anything real estate, and the market was bubblicious. This thing, I mean, we've got anything and everything from Bitcoin to fart coin, literally fart coin. Did you see that? There is such a coin. Has a market capitalization more than 38% of the Russell 2000 real companies trying to make a living. And so this is the sort of thing that goes on. Doesn't matter though. It can keep going on. So you got to be very, very judicious about what you're trying to achieve and what you're trying to do. And because they can keep running over you if you try to get in front of it too large and just say, hey, I'm just gonna, because of a stochastic, just gonna get short or something like along those lines. In fact, I would not recommend that. Really pretty wild. I mean, look at this. This is since is this tonight? So Bitcoin has moved I was gonna say I thought it was 10%. It's moved almost 1.9, almost 2% just tonight. Just tonight. Yeah, just craziness. But it is what it is. We don't concern ourselves with it. What I don't like, I don't really care about the highs or the lows. What I don't like is the compression of volatility. I'd like to see more volatility. I know that it will come and it will, and we'll, be rewarded for it. But in an environment like this, I just remind everyone, we're reminding ourselves to stay small, Stay patient, stay disciplined, get in, affect your trades intraday, intra evening, and get on out. Get on out. We'll be here. Any questions, let us know. We are busy setting up our programs for tomorrow. And if you are passing by, be sure to push the notification button. And if we get the opportunity to punch up live, we'll probably do that around 9:15 tomorrow. And then the programs will start trading. And we're out to do something specific. But in the meantime, Swing Machine is doing its view. We're also simplifying the view of Swing Machine a little bit here. We've historically been showing the 135, which we still have, but here we're going to show a few more markets and showing just a 5-minute view. Um, when we take a look at the daily, let me just do this. We're going to just change swing the VIX to a daily view. We're at 40 on the fear and greed. So it's not as carefree as you would think. It isn't. Let's look at the S&P. Where is it on a daily? It should be around 50 or 60. Let's go look. It is. It is. So it's right in the middle. So the market is, in our view, on a daily basis, the S&P and the VIX, it's in the middle. It's proportionate. There's not a lot of concern. The challenge is when markets do this, they can stay there. They can stay there for, a little bit. It's easier from a swing trader, an options trader, a counter puncher, a counter trader to play when they're at the extremes and not from the middle. Um, let's take a look at the NASDAQ. NASDAQ is really ahead of itself up here at 70. They could go higher, but I think there's still tremendous risk. So we could go through the others, but we're going to put these back to a 5-minute view and let you see it for what it is. Now, the Bitcoin contract, you get to see the Bitcoin price, but the margin requirement is enormous. This is because the Bitcoin futures contract takes um, five Bitcoins. It's like $500,000. It's huge. Ethereum's not as rich, but still quite rich. But you can see what they've done. Now that signal came in tonight at 6:05. It's up 8,500 bucks. So the Bitcoin's moved 1.63%. Crazy just tonight. We're going to keep an eye on that yen and the Aussie dollar. Could also put the euro in here. Why don't we do that? I'm going to add a label row. Let's put a label row in here. And let's put the euro, dollar, and what happened there? I don't want a label row. Let's delete that. And it's at EC. And it's long on a 5-minute basis, on a 5-minute. The program that we're going to run won't start trading. Well, it'll be turned on early, but it won't start trading. It's not prepared to take its first trade until sometime after 9:30. And we'll have the NASDAQ and probably 2 or 3 other markets teed up and ready to go. And we'll give you a view of of how they do. We are mechanical robot traders, right? We're operating from the assumption that of 2 points of what is known, what can be known in the market is known, and it is known by everyone else except us. I want to be the most ignorant person of all the Bitcoin stories, of all the gold stories and the silver stories and the AI stories and this narrative and that narrative. I'm not interested in any of them. I'm just not. I mean, I'm interested to the extent that I enjoy a good story, but I'm not interested in the stories to affect any trades. We come at it from the standpoint that not just today, not just in the last 5 years, not just in the last 10 years, that these markets are run by machines. The machines are looking to do what we're doing. They're looking to extract cash flow from the money flow. They create their own volatility. They suppress their own volatility. They run to various levels. It isn't as though it's just one machine. It's a multitude. There are thousands of them, maybe millions of them, and they're doing all kinds of cross arbitrage tricks and counterpunching and sustained trends and going to strike prices around options and setting markets up for for triggering stops and sucking people's money into the market, all kinds of things. We're using our own machinery, our own algos to come into the market for very brief periods of time, affect trades, extract cash flow, and leave, and come back and do it again another day, and the day after that, and the day after that. And if you have any questions, we're not going to bend your ear. We are busy tonight, doing what we do, getting ready for our own trading, getting programs out to new members, getting prepared for Q schools. And I'm not suggesting that this is for everybody. Nope. We're not making the algos make specific trades. They do. Um, but we're not making specific suggestions, recommendations for anyone to do anything with their money. I'm not. I'm not making any claims. I'm not saying that if you subscribe to us that you're automatically going to be able to quit your job or you're automatically going to become the next super quant. You might, I don't limit anyone, but I can't and I don't suggest that. I do know our members work very, very hard. They put in a lot of time, a lot of effort, a lot of thought. You have to think through. We can look at some trades that went off. Let me bring this up here now. This is 12:15, so this is tonight at 7:15. The VIX at a 5-minute level turned down. The ES at 6:25 tonight. That was on the ES went long. at this price. If a person had taken this with one mini, they'd be up that amount of money, 175. The NQ went long at 630, they'd be up that much money. Now, if you're using a micro contract, you would it's 1/10 the size, 1/10 the margin, which is a great product because you can now scale or use a multitude of contracts. I think sometimes folks, get themselves caught in a rut. I'm gonna use the same amount of leverage long as I'm gonna go short, and you don't have to do that. You can, if the dominant trend is in a particular direction, you could use a little bit more margin going in the dominant, half the margin coming back, that sort of thing. So the micros are very conducive for that. Here's the Dow. It went long also at 630. Here's the Russell. It went long tonight at 605. So that's what those trades are. Here's gold. Now gold went short on the 13th. So here's silver, oil. That's tonight at 7, went short. This is nat gas. Nat gas is short from the 13th. And here's, Bitcoin. Now this is huge, huge leverage, right? $8,000, but it's a huge, huge leverage. Even the micro is huge leverage. It's huge. But the Bitcoin, since the signal at 605 tonight, Bitcoin itself, the coin is up almost 1.68%. Ethereum, same thing. The Japanese yen went short tonight at 745, up 106, and the Aussie dollar. Now, I'm going to change the yen on and put that on a daily. And so the yen is down in here. I'm thinking, I'm thinking from a position standpoint, I'm thinking long yen. Um, and it's very enticing down here. Maybe still a few weeks away, but I'd be inclined to want to be a buyer of the yen. Aussie dollar, let's go take a look at it on a daily. Yeah, it's down here in the same thing. So the dollar, I don't have the dollar in here, but the dollar has been strong. I think it's coming in a little bit. We'll put that yen back to a shorter time frame. We'll just put it at 5 minute. Now, if you have this tool on your desktop, and we have close to 70 tools now and growing, we're working hard. We got some really, really neat things that we're working on. Um, some radical new things, especially using Swing Machine, or excuse me, Radar. This is Radar Screen at TradeStation, and this is our proprietary tool called Swing Machine. It's only one of 70 tools, but you could change these, right, to all, if you wanted to come in and you'd like to slow your breathing down, you'd like to slow your trading down, maybe, and when you slow down, when you go from 5 minute to an hour to a 240 minute to a daily, to a weekly, at least what do we do? We reduce our leverage, right? Because those signals they're going to be more significant, but you could have larger drawdowns, you could have larger run-ups, and you could have larger profits, but you could also have a larger loss. So if we take on more time, we want to reduce the leverage. And there's nothing wrong with that. In fact, most new traders do just the opposite. They're trading too quickly. So that's why we kind of wanted to slow it down. We can come in here. Let me give you an example. And so these are all round numbers, by the way. And if you're trading during normal session hours, one of the time frames we like to use from like 9:30 to 4, if you divide those minutes evenly, come out to about a 13-minute bar. So we could customize all symbols to give you an idea. We could set it at a 13-minute bar. and they're all going to change to a 13-minute, and they're going to be slower signals. And then if you wanted to go to a 1 hour signal, we go to customize, we go to all symbols, and we could change them all to a 60-minute. Now, a 60-minute signal, to give you an idea, we have had 60-minute signals last for weeks. Isn't that crazy? You would think that, like maybe a couple of days, but they can last for weeks. So let's just take a look. Here, the VIX on an hourly is tricking along. So that's noteworthy. It is noteworthy. Could be some concern there. And if we see an upwardly sloping VIX, then we're thinking maybe the market's going to pull back. The 60-minute on the ES went short also 10 hours ago, which was back on Friday, the 13th, but it's down. That's fine. The NQ went long 57 hours ago. Isn't that crazy? 57 hours ago. The Dow, though, look at the Dow. The Dow on an hourly went short 145 hours ago in its own little world. The Russell went short 46 hours ago. Gold went short 34 hours ago. Silver, 34, literally right down to the same hour. Isn't that crazy? 10 a.m. on the 12th, 10 a.m. Oil went long 81 hours ago, 81 back on the 10th, still long. Nat gas went short 10 hours ago. And then Bitcoin, look at Bitcoin. Bitcoin goes long 17 hours ago, $24,000, 4.9% move. Ethereum, 57 hours ago, 5.72% move, but because it's highly leveraged, quite a bit of money. The yen goes short 110 hours ago. Deliver that. There you go. And the Aussie dollar short 31. The trade that I'd like to see, but I don't know, it could be another couple of days, but we want to see that VIX continue to come up. And then we'd like to see all four markets pull in. Even if you're bullish, you want to see them pull in. And I think in that pull in, I think you'll also see the yen come up, maybe even see the Aussie dollar come up. I think gold and silver are making a statement here. They may have near term peaked a little bit and pulling back. And then, of course, you can change all of these to a daily signal. You can change them all to a daily. Now, the payouts are going to be much, much bigger. But in order to have stayed in these trades, you would have had to be been prepared for larger draws. So here's the VIX. It went short 28 days ago. 28 days ago. But the ES went long 68 days ago, back on September 11th, well before the election, probably at the point in time they knew the outcome. The machine has delivered a percent return between the signal price and where it is, 7.8%. Because it's leveraged, one mini is 21 grand. A micro would be 2,100. 10 minis would be 219,000. Look at the NASDAQ. 64 days ago, on the 17th, the signal has generated 10% return, $42,000. A micro would be 4,200. 10 minis would be $420,000. But it's a daily. It's been 64 days. So I think a person has to know what it is they're trying to do, what it is they're trying to achieve. If they sit and wait for 64 days, 70 days, 80 days to put a trade on, and they put on so much leverage, and or they don't fully have confidence in their own skill set or their own tool, as soon as they're up $1,000, they take the trade off. Well, you know, they take the trade off. You might be waiting another 60 days for the next one. Could have used options, maybe had made it more comfortable. I grant you, trying to sit on a futures contract for 64 days for the uninitiated, for the novice is going to be pretty hard to do because they see the money, fluctuating. The Dow on a daily is been long for 86, but it's dipping. Right? Here's Bitcoin. So Bitcoin, and I can't reprint this. It is what it is. Bitcoin went along 46 days ago on October 11th. It's generated a 63% return from the entry price to where it is now. And yes, if you had, huge margin, but you'd have quite a bit of money. We're going to put this all back though to a 5 minute interval. We'll keep it simple, short, and there they are. There's all the 5 minutes. We have very high hopes for the programs that we're going to run tomorrow. We have a strategy that we've had in our bailiwick, and we've been exploring it, and we haven't run it in exactly the way we're going to run it tomorrow. So we're going to see, and hopefully we'll be running it all week, and we'll keep you posted on how we do. If you want to try to get away, I think you should. Doesn't have to be with us. Get away from trading the money. Got to get away from that. Yeah, that might be fine for the Indian casino. That might be fine for everything else, but you got to get away from it. And we work really, really hard with everybody initially during what they call the Q school, encouraging them to how to look at it, how we look at it anyways, and how to recognize their own trading personality and to work on it and to develop a discipline where you're reacting to signals or letting the signals, drive the car. It's going to be no good, to go out and buy a self-driving car if you don't have the confidence to let it drive you. What good is that going to be? But you have to, work at it. And and once you begin to turn that corner, it's, it's a great way to go. Great way to go. By the way, the CME challenge, we made a short little video. We didn't get it done. We I don't want to make it sound like I'm making excuses. I'm not. We discussed it in advance. Um, and I give credit to the people who did win it. I don't, besmirch them at all. Um, what we have said about these CME challenges, there's only been a handful that there's a couple of things about them though. One, it encourages maximum use of leverage, which is not something that we do day in and day out. It's not something that we suggest. It's not something that I think anybody should do. I think the CME could, I don't know, it's still a game. I get it of what they're doing, but they might want to think that through a little. Um, and there's some other aspects of it. We can't set up our trading robots. So we have to mechanically put the trades in on their site. It's clunky. There's like 2 or 3 steps. It's very slow, even though it's real time. And so we just didn't want to be trying to overwork it and having to stay up overnight. So we came in last week. We looked at our daily signals. The NASDAQ was in euphoria. We went after it. We put heavy leverage on. The remaining leverage that we had on Monday or Tuesday, we shorted silver and we also shorted the ES. We wanted to get ourselves into a position to be in the top 10, the middle part of the week, Wednesday, Thursday. The next big trade that I wanted to take, and I verbalized this on Monday, Tuesday. I was like, man, I wanted to fade gold and silver going into Friday. And on Tuesday, out of 3,000 traders, we were up about 20 grand. We were ranked, we got the highest we got was 32. I thought we were in really good position, had a decision to make. I could have come out, um, but I I thought that we were in good spot. And we only traded like 8 times when it was all said and done. And then we had the inflation number coming out the next day, and I thought they'd be a good catalyst. I wasn't going to be here for it. But long story short, it didn't, the NASDAQ held in there. We drew back, and when it was all said and done, um, we stayed with the NQ all the way through. We didn't stay up overnight because we had no shot of catching them, and we finished like a couple grand down. We were like six to 700 back on the NASDAQ. On the micro, we finished like number 47, but I don't think there were 3,000 people trading the micros. So, but had we had we taken the profit on the NASDAQ at 20,000 and shorted silver, I thought it was still early, but had we done that, we probably would have won it because silver pulled back really hard, and and we would have been in real, but would have, should have. I wish we could automate it so I don't have to work that hard, but we're just not going to stay up around the clock and be trading it that actively, for a contest. But that's where it was. So, and we'll figure out some way of getting it done. I don't know. I don't think there's an API. I think on what API, so you can attach a machine to another machine, but I don't think we could have done something like that. I think that for members that have Swing Machine, I think if you have any number of markets, could be futures markets, could be stocks, could be whatever, and you just go and put them all on a daily or even a weekly view, and you see the stuff that's in euphoria or in panic, is to take the counter trade for a week or two, you're going to do pretty well. Just that alone. Just don't oversize. Just don't go maximum leverage, but you're probably going to do just fine. And or use your option savvy. If you have something, for instance, that on a daily basis, let's say it's in panic, maximum, sell off, it could go lower, but you could come in and sell a put credit spread, down, what we call down on the delta, and then she just hugs it down there or bounces up a little bit. You're going to do okay. You're going to do just fine. But boring. You're not going to win any contests. You're not going to win too many bragging rights or anything. And that's the thing with the CME. We weren't out to just try to, finish, in the top 100. We were trying to win it. And, we were playing, going for broke, which is not what we teach, not what we do, right? It isn't. So I'm just reminding everybody, it's not a good idea. Don't do that with your bread. Not a good idea. But if you have any questions, be sure to visit the site. And you're welcome to call any day, 9 a.m. to 9 p.m. And like I say, tomorrow morning at around 9:15, we'll punch up and the trades will be going in. And they even have trade counters. I'm not sure. Have some notes, but we can actually set counters so they'll only trade like, 2 or 3 times. And it's going to be relatively small. We think very opportunistic. We've ran some back tests that are show very, very good promise. Now, a back test is a back test, right? There's always the concern of a curve fit. We don't think that we do, but also TradeStation has something called a walk forward optimizer, where we can take, in this case, the back test had about 30,000 tests. We plugged that in and it had really, really good results on the walk forward optimizer. So we're feeling very, very good, you know. But what's going to have to happen is we've got to see it trade, and does its performance day by day um, perform in line with the back test and the forward test? Does that, we're be in good shape, and we might be running it for weeks and might expand it out to other markets. We will, if you are an annual member, um, and you want to know. We haven't yet decided the exact markets yet. We're still running some things tonight, but you see it tomorrow and you want to know, you just send me a note and I'll tell you the exact market. I'll give you the exact settings that we're, looking at and what we've done. And we'll try to do that. We're going to try in the weeks and months ahead. We're going to try. It's just that we have so much, but we'd like to be showcasing some of the tools that we have, but we also got to be careful, and in fairness to the members, on YouTube, you're going to see things going in and out, but we're going to protect our our intellectual property. You're not going to see a whole lot. We're not going to have folks just um, trying to um, glom on to us. We work very, very hard. We do, our members do. And the swing machine is a beautiful tool. By the way, we set it on time, but you can also set it on ticks. Um, it has about 800 lines of code. Does not use moving averages, doesn't use stochastics, doesn't use MACDs. A lot of that shit can get you into a lot of trouble. Really can. But and this is just one of, dozens of tools. We'll let you watch. Thanks, thanks, Ray. I appreciate it. By the way, we've been doing this a long time, right? Susan and I, we're not from Wall Street. We're not from Madison Avenue. Um, Very traditional careers. I um, spent my primary career was with surgeons, teaching surgeons how to work with state-of-the-art surgical instruments of the day. Um, I would have left that in the early 2000s. Susan worked for IBM and for Lotus Software in the day. We set out to build these tools for ourselves in the early 2000s, had no expectation whatsoever of stock market caddy or making it public or anything, not at all. We were doing it purely for ourselves. Um, Stock market caddy came about really when social media kind of took off and we began to, the trading is pretty boring. It's pretty lonely. It is, it's a lone, if you guys are doing it, it's kind of a lonely endeavor. I like people. And so when Twitter started coming out of the ground, like around 2011, 2012, that's when we said, I wonder if there are folks out there that would benefit from what we've learned and benefit from some of the tools. Now, just to finish the piece, we don't make specific recommendations. We don't make any claims, but I do promise you this. I do. And I feel very good about it. You will learn a lot. You'll learn a lot, no matter whether you've been trading for just, you're brand new, you're going to learn a lot, of course, but you may have been trading your whole life. You're still going to learn a lot. And I'm going to learn a lot from you too. It's a two-way street, but you are going to learn a lot and see some things that you've never even thought of. Guaranteed. What we are not doing, we are not doing what everyone else is doing. I'm not coming on here and, wearing a cowboy hat and, putting on time cycles and a bunch of moving averages and stochastics and, the market's going to go here and the market's going to, we're not doing that. I mean, that's kind of asinine, to be honest. It just is. Um, thank you. Enjoy. As we showcase, there's other things that this can do too, right? Which we're not doing, but I just want you to know we can load in um, multiple time frames. This can be traded robotically, right? So we could put this onto a 5-minute chart and it could be trading robotically. We can have it trading multiple time frames. If, the 1 hour chart is doing A, B, and C, then we want to be doing this, that, or the other thing on a 5-minute level. We can trade, one market against another. If the VIX is doing such and such on a 10-minute time frame, then maybe we want to do such and such on a 3-minute time frame on the ES, that sort of thing. If we want to trade, um, let me do something here. Let's see if I'm going to put in the American dollar. Now, this is going to be delayed on this account. The American dollar is delayed, but let me show you something as an example. The D is for delayed data. Um, on the dollar, we have multiple accounts and we have other accounts where it isn't. But watch what I'm going to do. I'm going to change just the dollar to a daily. So on a daily basis, it is quite remarkable too, by the way. The dollar 51 days ago on October 7th went long. Now, for all the hoopla about, and that's a 4.48% move from 102 to where it's trading now. A dollar contract in margin to go overnight is about 2 grand. So you're up about 200% in cash. Okay, so that's why I don't get like I don't get all excited about Bitcoin and or crypto. Um, I'm a little, when we I don't want to digress into the crypto, but I'm a little bit at odds with it because when Bitcoin came out, I understood it was going to be a currency. You ever notice that it was going to be a currency, right? It was going to be a currency, and it was going to be like a dollar replacement. Now all of a sudden, you notice like all the Bitcoiners that are pumping and pumping, it's now an asset class. Like, what? There's a little change there that I'm not so sure about, but regardless. So what currency goes the opposite way of they all do, but in particular the most? Where's the euro? Where's my euro? Did I just replace it? Oh, it's down here. So let's scroll it up. It's the euro. So here's the euro. So let's put the euro on a daily. Now watch. Now is this beautiful? The dollar goes along 51 days ago and you'd be up 4,500 bucks. The euro went short 51 days ago. Now, why the date is off? I gotta believe that this is like around a weekend. Let me go look. What's going on here with those dates? Let's go back to October, right? Let's go on October 4th and 7th. Yeah, a 4th and 7th. It's a Monday, so um you would think it'd be like 52 days, but For this one would be 52 days, but it's just off by a day. I'm not sure why that is. I'd have to go look at that. But I guess what I'm saying is that for if you had gone long the dollar and short the euro, that's about a $5,000 marginable, contract, together, and you're up about 10 grand, 100% of your money, and it's in a cash deal. So we do have members in Europe, and this is a beautiful tool, and it will go the other way, and invariably they do match. Now let's just take a peek at the yen. Did the yen go short? I don't think it does, but let's go take a peek. No, yen is kind of in its own world right now. I do think the yen is going to rally. I do think so, but it's not right now, not these 6 days. But I do think it's going to rally. And I do think it's going to be responsible for, a real hard pullback in the market, but not yet. But the wait a minute. Yeah, this is I say Aussie dollar. This is the American dollar here. But the American dollar and the euro do this all the time, all year long. If one is short, the other is long. If the other is short, long, and short, off of swing machine. You could just do that. Yeah. So if you're a member and you're not trading the dollar and the euro, I think you're missing something. Okay. It does it all the time. It's really a big fat trade and an easy trade. Because if one's not working, then the other won't, and it's a beautiful pairs trade. So I'm going to put this back to the Aussie dollar, though. Um, I don't think the Aussie dollar is going to be the same. Yeah, it's about 45 days. But when the American dollar is strong, the other currencies around the world are going to be taking it on the chops. It's just the way it is. And the Canadian dollar is very much getting whacked. Great time to go visit Canada from the States. They're down at 70 cents on the dollar. Beautiful country, beautiful people. We love going to Canada. Um, Interested in the 135 minute. Yeah, I don't have the 135 up, right? But if you see the videos, we almost always have it up at 135. And let's put this back to a 5 minute. But we just want to be able to do some, give a different view. And and that is the technique when you go into Q school that we will teach a person how to trade the 135. And then you're free to do what you want to do anyways. I mean, obviously, if you become an annual member and have this on your desktop, we're going to show you, different ways of doing this. And there's not just getting on the trend. This is going to be getting the trend, but we can use this tool over here for counter trending. There are other tools. Let's give you some trades for tomorrow if you're an options trader. So let's come here. This is a radar, and notice it's blue because it's stocks. It's called SMC Options Defined Risk Club Selector Radar. Now this yellow thing is from Zoom that I highlighted. So here are the long opportunities, these stocks, and let us show you them. There they are, right? So if I'm looking over the next couple of days, these are the stocks that I'd be looking to consider longs. The tool is actually telling you what it thinks the best configuration would be. Some of these are just calls. They're all defined risk, but that's what it's doing. Now, where you place these in regard to the delta on your option chain is still going to be up to you. And, you can really do well if you know and understand how to minimize your risk with options, which we also teach. But this tool is beautiful and it's done by math. So this is where we get them. On the short side, well, it's interesting. There's not as many. This is the S&P. Now, this is just the S&P. You can do it with the NASDAQ. And notice it is saying with Tesla, just suggesting a flat out put. This would be for 35 or 45 days. And I think it's probably a pretty good trade. Same thing with Broadcom. This one is, what is that? Henry Jack suggesting a call credit spread. And iron condors, if you know what iron condors are, they're also define risk. These stocks right here are the best opportunities tonight for iron condor candidates. Now, these are not going to be trades that are going to pay you, necessarily. Some might pay you tomorrow, but um, but not expectedly so, right? Where this is for 35 to 45 days. But this is where we get them. And this is where our members get them over and over again. Now we can also go on Friday. We were with you on Friday. Let me go get our Pebble Beach triggers. Let me go get this. Bear with me. This is, where is it? What's crazy? I don't see it. Oh, um, I think it moved. Yeah, here it is. It's it. It's out of line here. But it's the Pebble Beach. So all these triggers happened on Friday, and they're all profitable with the exception of one. So they all happen. These happen intraday, but some of these can be really, really nice. So I'm not going to short an $18 stock, but what is this? This is Accenture. Yeah, yeah, it looks like it's going to pull back to me. This is T Rowe. Yeah, we would have had earlier triggers on that, but this is SL Green Realty. Yeah, it looks like it's good. Now you you don't have to just buy, right? You don't have to buy just at 74. If you want to get long something, what you could do is sell a put credit spread. Like sell a 72, put and buy a put at 70. Do it down in here and then let the time erode. But I'm looking for something big. Well, here's Microsoft generating a sell on Friday. Yep, that looks really, really good. And there it is, right there. Now you're going to come in with, $100,000, wouldn't be much anyways, but it'll be 200 shares, but and short it, I wouldn't. What might I do? I might come up here at 450 and sell a call and turn around and go up to a 465 or 470 and buy a call and sell a call credit spread on Microsoft up here, provided they don't have earnings. And this is where we get these types of trades. Look at this one. This is another beauty. This is MSCI. That's a beautiful one there. Same thing. That's what I would do. Here's Disney. That don't look good. Here's Yum Brands. That don't look good. Boston Scientific, that little piece of crap. I don't like Boston Scientific, but that doesn't look good. IDEX. Nah, I don't know if I would short that one. Yeah, I'm not sure I'd do that one. UNP for a long. That looks pretty good. Now, am I going to go in here and buy it in here? No, what I might do is sell a put at 230 and buy a put at 225 or something like that. And here is Win. Yeah, that kind of looks a little toppy. This could be A, B, C. This could be making an ABC down. Maybe. But this is where we get them. This is more opportunity. This is where you would get them, not from me. We are going to present the algos, what they're doing every night on video, but we don't, uh, you know, we don't comment on every single one. There aren't enough hours. You want to be able to just look and know what you're looking for and get them. If you have them on your desktop, you're going to be getting them real time. And that's where you get them. You don't need a TV. You got too much to watch, too much to do. You don't need a TV in your office. Chuck it. Don't need it. Now, also too, let me just show everybody. This is kind of crazy. All right. And I just think we're up against the calendar, but I'm very uneasy about something. And I'm not prone to talk about market crashes. I'm not. I'm always concerned at extremes for a severe pullback or a severe run up. I will be, but I'm very concerned with this. Um, this is nuts. See the skew on the SPX? We're at 169, 170. Folks, this is ridiculously high. It's crazy high. Like we saw it one day last week at about 172. The market is way, way too bullish up here. It just is. But it can stay. I just want you to know it can stay. But if there's a catalyst, and God knows there's plenty of things in the world which I don't want to jinx any of us, going on. But in order to get the skew this high, what has to happen is the Warren Buffetts of the world who own the shares, they have to be selling calls, and there has to be a fever pitch to buy calls. And there is. And then and then on top of it, they take that premium and they buy puts down low, and that drives the skew higher. So when we're up high and the VIX is low relatively, and it is, and the skew is jammed up high, it's like just don't let it match. I mean, there's gotta be a comeuppance. Yeah, but I'm not telling you it's tomorrow. I'm not telling you it's going to be this week. I mean, I would have given my front seat, if it was last week, when we had the CME on. I mean, to think about it, with the CME, I had $1.8 million of CME money short, marginable money, 1.8 million. And we finished down, we finished down $2,000. I mean, the market, it just didn't do squat. It didn't do squat. If we had bought it, we would have made like maybe 20, 30,000. But I mean, it was ridiculous. It's ridiculous. Um, it was seasonally, we're up against it, but even though seasonally there is this thing, the Santa Claus rally and everything, but the last 2 to 3 years, it hasn't really, there have been some really nasty periods in here. Some nasty periods. And I get news for you. I don't know. No one seems to care. Um, I don't know what's going on with those drones. But, if you're reading what I'm reading, talking, well, they could be sniffing this and sniffing that. Um, God forbid, we're going to be having New Year's. We're going to have a lot of people in New York. I mean, you know, God. But this market is oblivious. There's no concern. I grant you that. There's no concern. Everybody's at, Disney World. They're just like, okay, yeah, no problem. Um, I know, and I'm not, to make no bones, I'm not invested long. I'm not balls to the wall long. Hell no, I'm not. Nope. We're traders. But if I was 10 years out, 15 years out from retirement and I'm balls to the wall long, man, I'd be a little, I'd be a little concerned. But they're not. The masses are not. And if they ever pull the plug, they won't let them out. They won't. What I mean by that is you can limit, markets can limit down. They'll just go down, boom, close them for a day, and then they limit down again. And the next thing you know, by the time they open them, it's 5 days later, and the markets are down 50%. They just won't let them out. This Bitcoin contract, the Bitcoin is trading at 100,000, give or take. There's five of them. So that means the futures contract has a notional value of 500,000. I don't know what the margin is on it now. I don't even know if they're giving you any margin, but it's probably got to be three, $400,000 to get one futures contract. It's enormous. So even the micro Bitcoin's got to be 50 or 60 grand. It's got to be, which is quite a bit of money. And they're trading them. It's like, hey, um, dangerous, dangerous. The richest person in, you can Google this, the richest person in Florida is a guy by the, I think it's Peter, is it Petrify or he's Hungarian. He's the owner and founder of Interactive Brokers. And he was expressing concern, not with his firm. He's very, very good at, being aware of margin levels, but he's very, very concerned that the margin levels are out of sight. And he would be in a great position to know. And his concern was that he's not concerned, and the market never is with any one individual getting caught. But if you get a firm, a clearinghouse or two, if they get caught, with some bad, on the bad side, and they can't recoup. I mean, the whole chalupa could, and that's when you'll see the volatility just explode. So how might you play? Well, and if I was long, not trying to paint fear. I'm not. But if I was, extremely long with extreme, I'd probably want to take some profits. I'd probably want to sell some covered calls. I'd probably want to get some puts on. I'd probably want to get hedged a little bit. You know, you can, get some spreads on the S&P or some puts going out, 3 or 4 months, just, go down further on the delta and, protect yourself a little bit, I don't know. That kind of what I would do if I was in that, but I would be alone. And if you're doing that, you're in the minority because they're not doing it. They're not. We can see what they're doing. They're buying it up. They're leveraging up. This is the retail trader, and they're asleep. But it's going to be fun. We're going to have a front row seat. And that's the beautiful thing. You got Swing Machine on your desktop. Now we've got multiple screens, right? But this is one of the primary ones that we have. It can be 2, 3 o'clock in the morning. When it comes, you'll see it. This will light up like it just instantly. And before any kind of news can happen. And I describe it, I think it was 2013. And I was up, it was about 2 or 3 o'clock in the morning. I was doing some work and it was the Japanese yen and the markets just exploded. I think it was down, but the yen rallied. What was it? I didn't know. And it was just me. I wasn't talking to anybody at the time. It was just, it was late at night and Susie was asleep. And I'm like, what in the world just happened? I mean, I really I thought maybe a nuke went off. I did think that. I'm like, holy crap, because it was so dramatic. And you know what it was? It was the Japanese tsunami, Japan tsunami. It was the tsunami. And and it was shocking to me because the yen rallied, and I wouldn't have thought that. I found out later, minutes later, 10, 15 minutes later. I didn't know at the time what had happened. And then it was, and I'm like, wow, Japan has an earthquake and Japan has a tsunami. I would have thought, I would have thought that the yen would have sold off, but it didn't. It rallied like a son of a gun. Nikkei get hit. And I'm like, I wonder why that is. And I found out the next day that the traders knew that the Japanese insurance companies were going to have to pay out claims. So they were going to have to divest themselves of their investments in the Nikkei, and they were going to have to pay out the claims in yen. So the traders and the machines started buying the yen before the insurance companies were even awake or even, before they could move. And that's why the yen rallied. I wouldn't have known that. I know it now. knew it after the fact. So it's one of those things, it's kind of like, you don't know what you don't know. There's a lot of things can go on. That's how we learn. Have fun, everybody. We'll be here. We're gonna let you watch up until probably midnight. I've got work I gotta do. I won't be ignoring you. But come midnight, the YouTube session will go down tomorrow morning. We'll try to punch it up so you can at least see some orders going in, and we'll see how we do. We have a capital set aside to facilitate those trades, and we'll see how we do. Yeah, Frey, the way our membership is, we basically have two levels of membership. One is a monthly membership where you get to see the algos, including Swing Machine, at a nightly level. Because monthly members really probably shouldn't be paying attention to intraday traffic. Um, it may sound like heresy, but you should probably only be paying attention to the closes and not the intraday. If you want to be an intraday trader, that's great. We are. We think it's great. But then the videos won't suffice. You have to have these tools on your desktop. So, but we do require everyone to go through the Q School once, just once. Make sure that we show you what we can show you, and you get a chance to ask all your questions over those few weeks. And then you get all the tools as an annual member, and you're up and running. And that's how we do it and why we do it that way. Hopefully that makes sense. But swing traders, if there's somebody swing trading and they're watching the intraday traffic, they're probably wasting a lot of their time. If you want to trade intraday, just get all the tools, but you got to have them on your desktop. And we teach you, there's a lot of different things you can do here. You can set alerts, like we can, build in alerts here, enable alerts. They can send you, you could have signals being sent to your phone, to your email, and you can build your own. Like sometimes we're asked, like, how come you're not sending out alerts? Well, because our annual members that have this, they can, um, they build their own alerts, which they do. Thanks. Okay, everyone. That was a little counter trade that we placed manually, and I'm going to lock in a stop. We had a pretty good view of it. Markets were moving pretty slow, and we're on the NQ. You're going to see a little asterisk, and bear with me. Okay, so we have a little stop, little guaranteed winner, guaranteed to make 35 bucks. We're up to 10, and we'll try to sit on it. And I love Sunday nights, Sunday evenings for this sort of thing. Pretty easy, pretty orderly. And we'll see if we catch ourselves a little outlier. Remember, there are 24 trading days if you count Sunday nights a month. If you take Fridays off, like we like to do, they're now 20. If you make $100 a day clear, that's 2,000 a month. 200, 1,000. 300, 6,000. 500, 10,000. What we want to do is trade slowly, disciplined, patient, mechanical, robotic. And we need to trade in proportion to our capital. If you are super focused on the money, my guess is you're over leveraging your account.